Good morning. This is Jerry Gulke, top producer, market strategy columnist for the report on the USDA blockbuster report today. If you've been around long enough, you've known by now that these June 30th reports can be really significant, and this was no exception. Last year's was a big deal for corn when we found 150 million more bushels of corn, and this year it's a blockbuster for corn when we found all those acres that was in the report, significantly higher than what anybody else had anticipated, and including some of the guys that were way on the long side of this, on the large increases in corn acres. Corn acres came in at 87, and we felt that there would be more corn planted than anybody thought, or at least in that report. And we didn't see the bean acres yet, and we were only off about 50,000 acres in the beans. So we hit the beans pretty well for our clients. Wheat was up again about 700,000, I believe, maybe 900,000 acres. The thing to watch or to look at really in these in this report was that how it was taken and who answered it. And the USDA did was exactly what they were supposed to do. Ask me what my intentions were given the circumstances at the time. Our survey and the guys in Illinois said we ain't going to make it, and they had less corn already in mix. We've got about 600,000 less corn in that area, 500,000 to 600,000 more beans, 400 some thousand acres. And every state that we had our survey, we found that there was unplanted acres. Total in the United States, we're thinking somewhere between 2.1 and 2.5 million acres that will not get planted. No doubt we'll see probably this report being the highest report that we're going to see for corn in quite some time, for the rest of the year, I mean. So we're actually saying that we're going to plant in spite of the weather, in spite of the high fertilizer costs, in spite of the late spring. The USDA is saying we're going to plant 1 million more acres of corn than last year. I doubt it, but we did find in all this these phantom acres. So what it tells us, back in March, that there was about 5 million acres less the USDA said may not get planted because of economic conditions. And yet, since then, price of soybeans went up $1.50 or $2. Corn went up. So what we're learning is that if the marketplace goes up, farmers will plant those acres that maybe wouldn't justifiably be planted before, and maybe put them into grass or something else. What they intended to do and what reality is could be not worlds apart, but could be significantly apart. So if you take this at face value and say, all right, there's going to be some unplanted acres, where would they come? Probably out of the intended planted acres of corn. And if we're right about our 2 million acres of idle land, some of that could come out of corn. Some of it may be out of beans. I think corn could probably drop 2 million acres by the time we get in the October 12th report. And again, the government really won't know what the prevent plantings were, what the acres are, until we report. So if you look at that, you gotta really analyze this thing to the point where what's really going on. Now this morning we've got you would think soybeans would have been higher. Corn open limit lower. July is after first notice day, and it's amazing how all this stuff fits into place because the June 30th crop report comes on the first day after the first notice day, which means there's no limit in July. Had you had a bullish report, you could be up 50 cents in corn. You could have been up $1.50 in July beans, but instead we're down 17. November beans have been down over 30 cents, and corn's been down 38 cents in July. So no limit in July corn. And on the face value of it, who in their right mind would take delivery of corn when the government just told you you're going to plant a lot more corn? In fact, you're going to plant 2 million more acres of corn than what anybody thought. That's about 300 million more bushels that we probably don't need. And because the stocks report showed that we were curbing demand last quarter, we had more stocks than anybody thought in corn, a little more stocks in beans. So it says these high prices hurt the livestock industry. High price meal hurt the livestock industry, and we're curbing demand already. For the livestock industry, this is a good deal because that helps the situation a lot, and likely this will save some the livestock industry in the long haul. Maybe the best thing that happened to us is that a year from now we'll find out, the June 30th stocks report, that we consumed more corn than what we thought we were going to because the prices were lower and we kept the cattle and the hogs on feed rather than liquidating the herd. So, but if you're going to be in the business, understand this may be an opportunity for you to start locking in some corn. At 30 cents down, I wouldn't be excited now. A lot of guys caught along this market one way or the other and spreading back and forth. However, I think when all the dust settles or the mud settles, we're not going to see corn acres this high, and bean acres might be up 1 million. Right now, this is a money game today. The guy that has got a margin call in corn, it's so severe. Just think about it. If you look at your price charts, anybody that bought anything, corn or November beans, in the last 4 weeks has got a margin call. In wheat, we've gone straight down. An unprecedented drop in wheat prices. So anybody that wanted to buy something because we're going to eat and we got to feed the world has got a world of hurt in his pocketbook. So I let this situation go by today. I let them trade. It's real dangerous to do anything at this level. If anything, you start looking at saying, boy, I missed the market. I wish I could have gotten 30 or 40 cents higher. There's some places you can sell calls and say, well, I hope Jerry's right. I hope this corn acres is a little less, and maybe we'll get a weather scare, and maybe we'll get September corn back over $4 again. You can. Today we talked about it, and I said I wanted to be very well covered in corn. We were 100% covered in corn, and at least half my beans covered just in case. In some of the bushels we manage and our own clients, we were up in that area. Even some were as high as 100% in beans. This morning we lifted them at down 30 or 40 cents. We got out of some of those on 25% of our beans on a big drop down like this, and started to scale in buying meal. Wheat, it's been a dog for a while fundamentally, and right now you won't feed any wheat to anybody if corn is this cheap. So wheat's got a job to do. It's got a big surplus, and it needs to get rid of it somehow. However, when you look ahead at $5 and some cents for wheat come this fall, when we lock in insurance prices, doubt there's going to be a much softer red winter wheat planted unless corn is in the dumpers. So that really is going to discourage wheat planting all over the world, and maybe we'll switch into corn and beans. But a lot more than you probably ever wanted to know. But keep an eye on July corn. It's like I say, it does not have a limit today, down 37 cents. So you're going to flush out these guys, and the downside, the market's going to take it too far, too fast. But you need to be there as an end user to start metering in and buying. If nothing else, you know you're going to use it, buy it in the cash market, set up with an elevator and say, I'll take some of this. And the basis will widen out with this big crop coming supposedly. There'll be guys out there that are going to punch some numbers in there. The crop statistics, the ratings suggest 160 bushel corn. You plug in 160 bushel corn at these kind of crop plantings, and you've got a 2 billion bushel carryover. That's a big deal. If that happens, then you've got corn maybe dropping down another 60 or 70 cents by fall if there's no weather problem. So in the meantime, if you're hedged, I'd stay there. Let the market force you out of it. You're in the right position. And if you're an end user, you start to selectively pick your point as to where you want to cover your costs. And we'll have another crop report in July. Now, understand that these numbers that we got today in acres, and the government will now plug in these acres and the yields they think based on the ratings. They'll plug that into the July 10th crop report on a Friday. Odds of anybody wanting to be long going in that, because they'll pretty much know what they're going to say. It's pretty slim in corn and wheat. There might be short covering ahead of the report going into the July, depending on the weather. So now we can start looking at the weather going down the line to see what kind of yield we're going to get. But right now it says we can afford a big weather problem if these acres are right. Have a good day and good marketing.